If you were to think of it in a price discovery, the market's a price discovery mechanism. Mm-hmm. And you've got long-term buyers coming in. Whenever it dips, someone buys the dip and says, I'll take that price. Thank you very much. So it's rejecting any lower price because people do want to buy it. And so if you get this history of it, I'll buy that. And then, I'll buy that. And next higher price, you get this kind of pattern forming where this thing is discovering its natural price higher and higher. And certainly with Bitcoin being quite special, it's a market that's not at saturation. Publicly traded markets, commodities, gold, anything you can think of in the traditional world is at saturation. It's done its full penetration of its market base, people trading it. Whereas Bitcoin, of course, is in this hyperbolic curve upwards as people adopt it. And so we're currently something like 50,000 more people that you can see on the blockchain per day coming in to buy it for the first time. So that means probably around 150,000 people all told, including the exchanges. They'll probably be seeing 150,000 people per day right now coming in. So obviously you've got these hordes of people coming in to buy it, and every dip you get, they're buying it. So you get these you'll see this sort of upward moving, every dip is brought up higher. And that would be explaining this particular triangle within Bitcoin.
Right, that makes sense. I get it. So, yeah, okay. So when you talk about people then counter trading the longs, mm-hmm. Who's actually doing that? And so you say they're taking up the shorts. So these are more professional sellers. And how do how's the price get forced down to wipe out these degenerate long positions?
You can scare wall people. I call it a scare wall. So essentially, you put a big sell order, and it's this big wall of death, right? Mm-hmm. And so particularly if you're a trader, you're going to buy the derivative, and you're going to buy it thinking, okay, I'm going to buy it here, and the price is going to rip upwards if it's a long position, and then I'm going to sell slightly above that, and I'm going to cash home. But when you suddenly see this big wall of death saying, I want to sell $10 million or $50 million or $100 million of Bitcoin, right at the price below where you bought, you're probably going to get scared because that free run upwards is probably less likely to happen, because there's got to be someone that's going to take out that wall by buying $100 million of Bitcoin. And you might just decide you're going to exit your position. And you might, as you exit, that's called selling, right? Because you've just bought it. So that, like, someone who's got a large amount of capital, and these are derivative markets too. So say I've got like $10 million. That's a very small fund, very small hedge fund. And say I leverage it up 10x, which you can easily do in, Binance, FTX, BitMEX, all these derivative exchanges. You can go 10x with that kind of sizing, trading 10 million. So suddenly you got 100 million of sell power. And you just call everyone's bluff. You just go, all right, 100 million, sell wall. Let's see who gets scared. If they keep buying into it, you probably will pull it. And,
right.
You're faking them down. But, sometimes
so
I'll nibble into it. Yeah.
So when I'm seeing, sometimes I go on the trading platform to look at the charts, and you just see, these walls appear and disappear quite quickly at times. Mm-hmm. Or is that basically what it is? When sometimes the wall isn't being eaten, it's just being pulled. Yeah,
sometimes it gets pulled. You can generally tell which this, you can look at the order execution. And if the wall goes and it disappears and no one actually bought, it means they withdrew their order.
So is that why sometimes then the price suddenly flies up as well? Because it then just eats through the orders above it?
Yeah, because someone pulled the wall and everyone just FOMOs in and goes, oh, it's gone. That means they gave up. Let's enter our long positions, and everyone starts buying. So it's kind of a bit of a crazy game. I always say it's like the game of gridiron, where you're going for yards, and there's all sorts of tactics to push it one way or the other. So you can bet on which way the yards go,
Interesting.
Yeah.
So where are we in terms of price floor now? What's your kind of call for the rest of this month? What do you think is going on?
I tweeted something out a little bit back a few days ago, and I reckon where we're at right now is sort of a halfway intermission. Actually, the name of my last letter was called Intermission, because we're at the halfway point, and that's based on a lot
minor
of
revenues,
miners revenue. So every time miners sort of exceed their prior all-time high, the last one was 2017, obviously at the top of the market. Since then, we've had a halvening, so they're mining half the number of coins per 10-minute block. So they've got to make that up with higher prices. And we just kind of passed through that zone at the weeks, a few weeks ago, where we went into this consolidation ban. If you look at whenever they go through this zone, price goes through like a consolidation. And if you remember the double pump of 2013 on the charts, that was a
what was that?
That was that big sort of run up, and then it corrected, I think 93%. But if you were tracking the minute chart, but people thought that was a bear market, but that was actually the consolidation of 2013 because it was such a volatile asset. And we saw the same thing in 2017. We had that first major dip. I'm just looking at that at, what is it? It was around the 2,000, 2,500 zone. We went through this big consolidation. That marked the sort of a halfway point before we ran up again. So I think we're there. We're just sort of pausing. And we're just making that breakout. So, it's interesting in this. I don't know exactly what's going to happen, how the price chart will shape till the end of this year, because things have accelerated so quickly. And if we have the same sort of quarter that we had in the first quarter, it seems too fast. And that would normally spell the bear market. And it might come early if it's going up at this rate, according to some.
It might come because it becomes unsustainable, and once you enter a bear market, people get spooked. Whereas if it's more sustainable, you might get to those higher prices.
Yeah, it's. I mean, I use a bunch of models, but like the main one that I'm predicting the top on. That's a moving average essentially. It's something what tech traders will call a mean reversion model, and that simply is a moving average. Like a lot of people use moving averages on the price chart, and when it starts to run away from the moving average, you tend to think of that as being overheated, and it's going to come back to that average. And this is a special one, which it's not rocket science. It's essentially the all-time moving average. It's the cumulative moving average, like the entire average for the entire price of Bitcoin since year dot. It uses that as a metric, and it happens to have hit every single top that we've had in the history of Bitcoin, which is, and so if you measure that line, it gives you an upper bound of where we can hit before it's got to come back down. So the longer this bull market runs, the higher that top can go. And right now, it's so fast.
What's the range you've got it in then? Is it like is that the chart I saw where you've just kind of splintered it off at the end? It's like 2, 3, 4, 5.
Yeah. So right now, it's on track to go above 300. Normally, this line, the top cap model, it curves upwards near the end of the year, and so if it goes straight line, it's 300,000. If it starts curving up, we're going to hit 400, 500. I don't know how high it'll go, but I haven't got a read of how hard it's curving up yet, right? So, gosh, I have no idea. It's really great because, Plan B sitting there with his stop to flow model, which gives a hard number of 288,000. right? And mine is like, I don't care. As more money piles in, this line keeps moving up. It's a moving target. So, but even that 288 target, you'll see that it overshoots. It always overshoots. Its fair valuation based on scarcity is based on that model. It overshoots. So if it's 288, it goes to 3, 4, even 5. It kind of fits his model because we overshoot and we come back down on the other side of it.
So we're looking good to leg up still right now, you think? I mean, we're back at 63. Like, people keep saying a number that's like 69,000, 69,200 or something. I keep seeing blah, blah, blah. I don't really keep to those, but I'm assuming we're going to run up to 70 at some point.
Yeah, so right now, I don't know if anyone's talking about it, where if you lay down the Fibonacci retracement line, so, what that is Fibonacci numbers, magic spirals, golden ratios, all these sort of patterns in nature. So it turns out markets are patterns in nature, and you put that trace over the price chart, and the next resistance is exactly in the zone what we're contesting right now, which is 63.4 thousand. And we're just working our way in that zone. Normally it goes sideways, it tests it or rejects it. So it's going sideways. Once we get past that, I think it's 74,000 is the next fib level. So it should be relatively clean sailing up to there. And then we can see, like, I have a model right now. It says we can't go past 84, 85,000 based on the amount of capital that's come into the network. And so at
over
this
what
point,
period? What this at this
right
point,
now, today, there's no way it can get past 80, 84, and that's going to climb as time comes, as more capital goes into the network. So obviously when we get to 70,000, whenever month that is, or whatever weeks in the future that is, more capital's coming in because we've got 150,000 people coming in every day buying Bitcoin. So let alone the hedge funds. So that gives you an idea anyway of price targets.